time for markets now, and we had lots to talk about with this week's analyst. Many producers may be committed to a crop contract that they won't be able to fill. We'll have some advice for those in that situation. Also, hear what our expected to be lowered yields are impacting the markets. And let's look ahead to see what may be in store for corn and soybean prices. I spoke with author and analyst Elaine Kub on Tuesday, and we started off by checking to see what conditions are like where she is.
Well, for my background today, I went out and I picked basically the scruffiest looking soybean field I could find in the neighborhood. But actually I did that for a reason. I mean, it's a good reminder that not just here in South Dakota, but nationwide, conditions are pretty dismal for soybeans and for corn. In the latest crop progress report, the soybean conditions were 53% good to excellent. That's, compared to last year, compared to any of the previous 5 years, that's not what we want to see at this time of year. And there's just a lot of catching up to do, heat units wise and progress wise. I mean, you look in Illinois, for instance, where they would typically want to have at least about a third of their soybean crop blooming already, only 2% are. So they are way, way behind. And just throughout the Corn Belt, everything is behind and everything has poor ratings.
And as we're recording this, we're waiting for the monthly crop production report. What are you looking forward to seeing here?
Well, I think what farmers or producers or anyone who's bullish in this market would want to see is to see the USDA go in and change the acreage numbers that they last released in that June acreage survey. Now that June acreage survey number, 91.7 million acres, that raised a lot of eyebrows, and that was just kind of releasing the numbers from a survey. But when they come in and do their monthly supply and demand reports, they can make more of a judgment call. The economists can go in and use what they know about what the weather has been like during planting season, or what other reports that they have heard, and it is possible that they could change the acreage numbers that go into those tables. It would be extremely, extremely rare. They usually don't have to do it, and it doesn't happen very often in the past, but 1993 is a notable exception where they can use some judgment and change those acreage numbers in the supply and demand reports compared to those weird June survey numbers.
And I was also reading your article about what someone should do if they've got a crop contract they need to fill, but either they didn't plant or won't have enough to fill that contract. So explain to us what that looks like from a producer's perspective and a grain buyer's perspective.
Yeah, nobody is happy in that scenario, neither the producer nor the grain buyer. And it's not everybody who has to deal with this problem. If you've got a producer who was maybe 30 to 50% sold before planting season, they probably got enough planted that they will be able, or will feel confident that they can fill any forward contracts that they have already committed to an elevator. But if you have somebody who was maybe completely skunked on their soybean acres, or they just have enough prevented plant acres or enough yield problems that they're worried about not being able to fill the contracts, then they have to go to their elevator and try and buy out of those contracts or cancel those contracts, which usually involves a cancellation fee, and that's a pretty painful process. It's usually better if the prices are lower, so there was some urgency to do that before prices went up too much, and now that we've had a pullback, there could be a good opportunity. If folks haven't already gotten out of those contracts, this pullback could be an opportunity to do it. But like I mentioned, from the elevator's perspective, it's not great either, because they made commitments with that grain that they thought they were going to get, and in order to buy it in now, they're looking at a much stronger, much stronger basis market. So it's costing them money too, and it's costing them lost opportunities.
Anything else you want to mention as far as what options a producer might have in that scenario?
Well, one scenario that would put you in a good mood in this world is if you had your own independent futures and options hedges. And a lot of folks don't like to do that. They don't like to open up their own brokerage account, and ordinarily you don't have to. Any of your marketing goals can typically be done just by working with your local elevator. But in a year like this one, if you have some reason why you need to get out of a cash contract, or if you need to shop around for better basis opportunities, there is that independence and that flexibility that those independent hedges have for folks.
Yeah, and on that topic, any tips on dealing with the grain buyer as far as renegotiating that contract, having to pay less in those cancellation fees, anything there?
I don't think folks have a lot of success with those renegotiations. Sometimes it will be baked into the contract. Sometimes the contract will just say something like to buy into how the market has changed. And because the market has changed, because like I mentioned, the basis has strengthened and the grain buyers are really in the catbird seat here, there's not a lot of renegotiation that's possible. And I've spoken to grain marketing advisors all across the Midwest this year, and these cancellation fees can range anywhere from 5 cents to 25 cents. They can, maybe if you have a hedge gain in there, maybe you get to keep it, maybe you have to pay. There's just a lot of flexibility, and it's a case-by-case basis.
Okay. Anything else you want to say to folks who expect to be dealing with lower yield potential this year?
Yeah, so the one thing that I think folks are noticing this time of year is that because we've had this consistent rain pattern all across the Corn Belt, the struggles are not done. If the crop is planted, you still need to be able to get out and get it sprayed. We're seeing more problems with fungicides, with insecticides, insect pressure. So like I said, the battle's not done. Folks still need to be able to get out into the fields with suitable fieldwork days and get some of these things done to their fields.
And finally, would love to get your thoughts on where you see prices shaping up for corn and for soybeans.
Well, I think, a lot depends on how that supply and demand report turns out here this week. So things could dramatically change if those numbers change dramatically. It could be the case that we get a real boost in prices due to a change in those supply numbers. But it could also be the case that we just sort of limp along here in the corn prices with the 430 to 430 level. We do see new crop soybean prices above $9, and as long as we continue to see these poor condition ratings, I expect that to continue.